Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SoFi Technologies and Palantir Technologies. In this video, we will be analyzing a plethora of articles to where the first one is titled, Warning, One Major Red Flag for SoFi Stock. After that, we're going to move right along and talk about SoFi Technologies' overall price targets and price predictions according to professionals, because some believe this company could surge in their share price up to $16, literally doubling in their overall share price, giving you a 100% increase on your investment, doubling your overall investment in just 12 months or sooner. Naturally, we're also going to be going over their latest news updates and their approaching catalysts. So this is going to be a great video for SoFi Technologies. And then after that, we're going to be analyzing an article for Palantir Technologies titled, How Peter Thiel's Palantir Pushed Toward the Heart of UK Healthcare. And this is going to be in regards to how Palantir Technologies could win a $590 million contract with the NHS, and that is going to happen sometime in October. So this is going to be a huge upcoming catalyst for this company, and it could send the share price surging up to $25 per share. And naturally, we are also going to be going over their latest news updates as well as their upcoming catalysts, which should benefit Palantir shareholders. So for more information, or if you want more videos on SoFi Technologies or Palantir Technologies, don't forget to go and annihilate that like button right now. Literally go ahead, press it right now, annihilate it for me, because it helps me out a ton, and it also helps get this video out to other people so they can invest into SoFi Technologies and Palantir stock. Also, I would love to hear your comments down below about the future price predictions and price targets that you have for these companies over the next 12 months. And if you want, don't forget to become a member of this channel for as little as 99 cents per month to support me personally, so I can continuously make videos just like this for you. And with all of that being said, let's dive right into today's stories. SoFi Technologies, as you probably already know, is a fintech company or a financial technology company that essentially operates as a digital bank. And despite the regional banking crisis that has rattled the overall economy and the stock market, SoFi Technologies is still going strong, with their shares up 68% this year, which we predicted in a previous video. This is why some investors are piling into this company right now and buying SoFi stock hand over fist. And this is not only because the shares are selling at a very cheap price, but also because of their upcoming catalysts. So let's take a deeper look to see what SoFi has in store for their investors. As you already know, the Department of Education recently ended their pause on student loan payments because the student loan moratorium has ended, and in October, those payments are going to be due. And this is major news for the overall economy because this affects 44 million Americans with federal student loans totaling around $1.6 trillion. And since SoFi Technologies is a very prominent student loan refinancer, this is going to increase the demand for that overall service, which is going to lead to more revenues for SoFi, and it's going to help them reach profitability by the end of the year. So clearly, SoFi Technologies is going to benefit from this, but you probably already knew that. However, some bearish negative investors don't think that this is going to go well for SoFi due to inflation still being at elevated levels. And if we incorporate the uncertainty in the macroeconomic backdrop pertaining to a possible recession, this leads to people not making payments on time for their student loans, which could negatively impact both the federal government and SoFi Technologies. But I think these worries are completely overblown. For instance, in just the first 6 months of 2023, the net revenue increase for SoFi Technologies surged by 40% on a year-over-year basis, making them an incredible growth company. And when we take into consideration their leadership team anticipating and projecting a forecast of adjusted net revenues potentially jumping by a 30% CAGR for the full year, this is very positive. Right now, SoFi shares are trading for $7.96, while very prominent analysts believe this company could literally surge to $16 per share, but we're going to talk about that more in our next article. Right now, let's talk about the risks that this company faces. Since the start of 2022, SoFi has originated around $16.5 billion worth of personal loans, which currently represents almost 80% of the company's overall lending activity, which is their main revenue stream. Their lending segment out of their three main segments is the most prominent one that brings in the most revenue. And some investors are worried about people defaulting on their overall personal loans, but the CEO, who is Anthony Noto, said during the second quarter 2023 earnings report, says this in regards to personal loans. Our underwriting model and our focus on high quality credit have resulted in dependable performance of these loans, as our annualized net charge-off rate was lowered quarter over quarter at 2.94%. Essentially, this is all jargon, which tells investors that no, SoFi Technologies is doing phenomenal, they are very safe, and these personal loans are giving SoFi loads of money. However, that still might not instill confidence in investors, who still believe that a huge risk is on the horizon for this overall company, but I don't think so. We are approaching two catalysts, like I've said before. We are in the midst of the student loan catalyst, and we are also headed toward profitability, which is going to act as another catalyst. But despite this, critics still say that the economic backdrop of the overall economy for the United States could deteriorate, leading to lower sales. And we've already seen this in major retailers such as Costco, Home Depot, as well as Target, and these negative critics think SoFi is no different. However, this is a terrible comparison, considering that SoFi Technologies is not only in a different sector than these overall companies, but also they have a different business model, different underwriting policies, and they are growing far faster than any of these companies. So that means that SoFi has a huge chance of further capitalizing on personal loans as well as student loans. This will lead to an increase in their overall revenue, and their share price will go up. With that being said, I do think that a wise investor should pay close attention to these developments regarding a recession scenario over the next few quarters, but overall, I do think we are out of the woods, and I don't anticipate a recession coming anytime soon. So now let's get into the nitty-gritty of how this is going to positively impact their overall share price. SoFi has continued to deliver very solid financial performance, and they even raised their overall full-year guidance and revenue, as well as their EBITDA guidance during the second quarter conference call, which is very positive. We saw a Goldman Sachs analyst reiterating a hold rating for SoFi stock on September 6th due to the company's deposit base utilization and their lower funding costs. Nevertheless, the analyst is concerned about, quote, loan origination demand and the price discovery for loans on the balance sheet, as well as the lack of profitability in the financial services segment, end quote. But overall, I think that SoFi is going to, over time, fix these overall problems. But that doesn't stop another analyst over from Truist saying that investors should buy this stock because he believes the stock could double in their overall share price. SoFi currently has a hold consensus among professionals. However, the current share price is around $8, while the average price consensus and price target from experts is $9.83, implying a 23.03% upside potential, making this a phenomenal investment opportunity, thus outperforming the general stock market. But that's not all. Very bullish, positive 5-star analysts believe this company could surge up to $16 per share, so you can double your money in a very short amount of time. SoFi stands to gain a lot of positive momentum as their personal loan segment continues to mature, and they are increasing their overall tech platform fees, which is going to add to their overall profitability once they become profitable by the end of the year. In the end, this is a phenomenal news update for SoFi Technologies, and I would love to hear your thoughts about any and all of these stories down below. But now let's jump over to Palantir Technologies, ticker symbol PLTR, which is a big data and analytics company which serves both commercial enterprises as well as government agencies. Palantir is currently fighting for a $590 million contract. But the story begins years ago to where they did a contract for as little as £1, and this is when Palantir entered into discussions on how to help the British government respond to the overall illness that took place in 2020. Palantir's software was processing streams of data all across England's National Health Service, also known as the NHS, which is the same institution that Palantir is trying to land this $590 million contract with. But again, let's talk about their history with the NHS and why I believe Palantir literally will win this upcoming contract. Palantir has already helped the NHS for as little as $1. Literally, Palantir charged the government just £1, or approximately $1 to $2 to do this during the illness to help out the National Health Service, which is ran by their government. However, since then, Palantir has further capitalized on their relationship with the UK government to where they gained work of around £60 million or over $60 million worth of government healthcare contracts. But its biggest reward is yet to come, because there is a 7-year contract coming up worth £480 million or approximately 590 million US dollars with the NHS, which is the National Health Service over in England. And if Palantir wins this is going to be a huge catalyst for the company and their overall share price. And this contract could be awarded in October, so literally right now we are in the midst of a potential catalyst, which is very good news for this company, especially if they win. But for me, Palantir is a shoo-in to win this gigantic contract, which will send their share price absolutely surging. They are a key player in the modernization of healthcare systems, and the UK government has more than enough money and a big enough budget to hire Palantir. Right now, Palantir trades for around $16 per share, but after winning this contract, the share price could surge up to $20 to $25 as the company expands their current relationship with the NHS, which is already very impressive. Palantir has already helped the NHS in the past for as little as $1, and this has led to them winning multiple contracts with various healthcare institutions over in the United Kingdom. However, there are naysayers and critics that are providing criticism regarding Palantir and why the British government should not hire profit-seeking companies with taxpayer money, because the NHS is ran by the UK government. But if they hire Palantir Technologies, that is a profit-seeking company trying to do business with the government, and some people don't like that because of Palantir's very shady dealings with the CIA, the FBI, and the Pentagon over in the United States. However, that aside, I think Palantir's relationship and networking capabilities with the NHS is far too strong. Palantir declined to comment on their bid for the NHS contract, but it's proud to support, quote, the world's most important private and public institutions. We are now helping to reduce the NHS backlog to cut the amount of time nurses and doctors need to spend on administrative tasks and speed up cancer diagnosis, all while rigorously protecting data privacy. So clearly Palantir is already integrated in the NHS, so for them to win this bigger contract just makes sense. Why try to hire another company which isn't already integrated into the NHS's system? The NHS even issued a comment saying that the application process is fair and transparent for all companies that are currently being investigated to win this contract, and they will all be treated equally according to the NHS. But again, I think this is tongue-in-cheek. I do believe they are going to pick Palantir Technologies because Palantir has benefited them the most, and they also have one of the best relationships with this institution overall. Another reason I believe Palantir will win this $590 million contract sometime in October is due to the consulting firm named Global Counsel, because in 2018, Palantir hired Global Counsel to position it as a respectable partner to the British government. And this consulting agency does have connections with the NHS. For instance, 2 months after resigning as the Deputy Chief Executive of NHS England in 2019, a gentleman by the name of Matthew Swindles also joined Global Counsel, where he advised Palantir. So you literally have the Deputy Chief Executive of the NHS then transitioning to Global Counsel to help Palantir, which allowed Palantir to infiltrate the NHS on a very intimate basis. We also see another gentleman named Shane Tickell, and he is the Chief Executive of an NHS contractor called Vorer Health Technologies. And he recently recounted a meeting with Mr. Swindles last year, remember, who was the Deputy Chief Executive of the NHS in 2019 and now joined Global Counsel. He recalls that Mr. Swindles suggested that Vorer build a software to work with Palantir's system, and added that the healthcare service might have money available if it did that, meaning that he already anticipates that Palantir will be further integrated in the NHS, and this contract could be exactly what he was referring to. And on top of that, this gentleman believes and even said that Palantir has an inside track to win the big data contract because of its work and ties with the government pertaining to the UK government. So again, Palantir not only has the best technology, and they've already done business with this institution in the past, but they also have very deep ties to the NHS in regards to their current leadership and former leadership. However, there are a few drawbacks, such as, well, some health officials officials have praised Palantir's software, questions have emerged over whether or not Palantir is suited for the complex needs of the NHS, which can vary depending on the region and types of care. However, I think that is absolutely ridiculous. Palantir literally has market-leading software right now, so if Palantir can't do it, literally no other software company can do it at this time. Palantir's software was not compatible with the hospital's patient management system, meaning that some workers had to manually input some of this data, but that was only according to 2 hospital officials. The technology did not work in some hospitals, but in the majority it helped reduce a backlog of non-emergency surgeries and cancer treatments by 28%, which is a huge improvement. And this NHS deal is essentially in the bag for Palantir Technologies, so we can anticipate Palantir winning a $590 million contract, which will cause their overall share price to skyrocket up to $20 to $25, according to some estimates. Now, for me personally, I don't know how high the share price is going to go. Perhaps investors will act irrationally and the share price could even go down. I'm not sure. We have to wait and see, but I do think Palantir will end up winning this contract. But I would love to hear your thoughts down below. Don't forget to go and annihilate that like button right now. Comment your thoughts down below. Subscribe if you are new, and I will see you in the next YT video.